Hello traders, my name is Adam from Trade with Precision and welcome to this week's episode of IC Markets Market Commentary. I'm starting off here with the Euro-Dollar monthly. The reason I'm doing that is because we are currently in a range and this is the candle for November. We failed to break and close outside the range. However, there's still the potential for that bearish momentum to keep moving down. Having a look at it, we had last week Friday was non-farm payroll. We had some good jobs numbers coming out of the US. US economy is still growing strong, which doesn't necessarily mean you're going to get a strong dollar. But right now, or at least lately, we have had a strong dollar. We can see euro heading down, cable heading down, Aussie dollar heading down, and so on and so forth. Right now, we've started a swing low. So, excuse me, we've started a swing low. And so my expectation for now is that there is a fair possibility we will get a decent retracement. And usually I would expect it to do at least a 50% or 618% retracement. That brings it up towards that 106, 107 level towards this area. That's usually the sweet spot that I'm looking for that correction if we're going to have a continued retracement. So really, I'm going to be focusing on this last week's candle. A break above the high would implicate or imply, don't know why I said implicate, would imply that we're going to have a retracement up, actually much higher, whereas a break of the low means that we're most likely to actually attempt to take another run at the outside of that range and break out of that range. A lot of the markets are looking incredibly overextended and quite bullish, and we do need to have a correction, but the markets are certainly kind of pushing their limits, and they're doing it almost across the board. One of the cross pairs that I want to draw your attention to that I find interesting, a lot of the yen pairs are starting to look more and more bearish. They've had a really decent correction, and actually some of them are setting up with the potential for their very first daily trades on the daily time frame heading lower. One of the ones I like, for example, is CAD yen. I really like this bearish candle for me here. Ordinarily, for myself, I'd enter on a break of the low with my stop loss above the high and target the next major support level. I quite like the look of this, and quite a few of the other yen pairs are looking more and more bearish, but that one in particular has kind of caught my interest. Moving across and having a look at gold. Gold, as I have said, excuse me, in previous market commentaries, I think it's a little bit overextended. Yes, it does have the potential to come up to 28.50, but it is still looking as though it very much wants to hold on to this potential swing high. And so this week, what I need to see, because if I go through to that data, you will see here that we have a recent high and we have a recent low down here. So we're sitting in no man's land. If we break up through the high from where we are now, we'll then have an uptrend. And if we break down through the low, we'll have a downtrend. So really, we're just waiting to see what's going to happen. But looking at the monthly, there is a very fair possibility that we could see a correction heading down towards these highs. Again, if we take that Fibonacci retracement and we measure it from the most extreme low here, we could very well find ourselves having a correction down towards that 2100 level even, or at least down towards the 2300 level. So that's really something I'm looking to see if we do get a move on that this week. If we then move on to crude oil, so crude oil appears to be building up a long-term bearish breakout pattern, which means that yes, if it does break out, there is a very strong possibility we could see a really nice move down towards that $40 level, but it really has to get through support at these local levels first before it could break out and then start to run. We're really starting to squeeze up in the corner. The MACD is trending lower. It's now sitting below zero. RSI is trending lower. These are fantastic indicators of that bearish momentum here. You can see it's really just starting to dip below that level, and all of that supports the idea of a bearish breakout. And if that does happen, obviously see that's going to move quite quickly. And from a daily perspective, really nice ways potentially of looking to trade that breakout, stop loss above these highs and taking profit as we go, obviously not exposing ourselves to too much risk. Now, moving on to the global indices. So one of the things I want to highlight here is that overall, especially on the daily, the structure is very nice and healthy. It does need a little bit of a correction. And at this time, because of the MACD and RSI continuing to put in fresh highs, I would be very happy to look for buy entries or still looking for buy opportunities to the upside. But where it starts to get a little bit hair raising is that on the weekly, so far we're sort of heading up towards the top of this channel. So we're becoming a little bit overextended in this area over here, not in danger zone just yet, not overextended to just hitting the top of the channel there, where it wouldn't surprise me if we did get a bit of a correction. It's really the monthly where it starts to get very interesting. Here we're starting to push up, starting to go very far away from the moving averages. And so what I'm looking for are the earliest signs of bearish divergence here, where we get fresh highs and we start to diverge on both of the indicators. We're not really seeing that yet, which means that at this time this trend is intact, and therefore buying opportunities still make sense. We don't necessarily have to be too cautious, but just being aware that at some point in the foreseeable future, within the next few weeks, it wouldn't be a surprise if we start to get some correction. So one way in particular that could unfold, price pulls back, we get a nice bullish candle here, it takes another run at it, and then we get a stronger rejection, and then we get the bearish divergence. So that's one way in which it could fold out. So if we have a look at the NASDAQ as well, tech stocks, you can see here we're getting a series of high highs. We're starting to get slightly lower highs on the MACD here, as well as the RSI, so starting to show a little bit of exhaustion there on the weekly. When we look at it on the daily, looks pretty good in every other respect, but certainly far away from the moving averages. And we're a little bit flatter on the RSI, a little bit lower on the MACD. On the monthly, of course, we're also starting to really push our luck. When you look at the moves we've had in the past, we're starting to look a little bit overextended. So again, if we get a correction there, that wouldn't be a complete surprise. But right now, the daily is looking very healthy, and any pullbacks I would see as potential buying opportunities. Lastly, I want to bring in the Russell 2000, because the Russell 2000 is just such a really nice sample size of small cap stocks. I really like the look of it, and we can see here starting to really just break out. It's bumping its head up against previous highs and resistance on the monthly. From a daily perspective, it looks okay. We've got a little bearish divergence here, but not really enough for me to be too concerned. From a weekly perspective, any kind of a pullback here for me would still represent buying opportunities. So again, not too concerned with the state of the markets at this time. For the most part, they still look very healthy. Let's have a quick look at Tesla. So Tesla this last week just continuing to push up. You can see here historically really coming back into these previous highs. It is definitely, without a doubt, overextended. So I am expecting at some point in the near future, I'm looking to see, or expecting this to see, a bit of a correction. Overall, the MACD looking very nice and healthy, and so is the MACD and RSI on the weekly. But we are certainly overextended, and so at some point I do expect a bit of a pullback. We should be hitting some resistance in this area, so I'll be looking for more divergence this coming week, or any kind of a, we're heading up towards 400, or we manage to break through that and keep going, or we ultimately show some signs of rejection, which would imply a bit of a correction. Nvidia as well, continuing to break out and move, just tick along. This one looking a lot healthier on the weekly. From a monthly perspective, you can see signs of exhaustion continuing to come in here, which means that on the monthly we are potentially running out of steam. And having a look at it from the daily perspective, we've got a bit of a bull flag here, so this is something to look out for. If we break these highs, then we're still bullish. However, as we continue to move down, especially as we start to head back down towards these levels, we might very well be dealing with a bit of a correction on the weekly. But overall, again, not looking terrible. No real major red flags that I can see. And finally, just wrapping it up on Bitcoin. Bitcoin sort of hovering around this 100,000 area. You can see that's a nice round number. Historically, it's significant. It's a nice move up from the previous move here as we broke out of this bull flag. So yeah, this would be a really good time for this to take a little bit of a breather. You can see it's battling in that particular area. The key level for me will be to watch this level here. Here at this level of support. Should we break and close below that level of support, then I would expect us to have a deeper correction on that weekly, starting with that, and then have a deeper retracement. So we are overextended there, and you can see it's battling with this level. So really, again, trend is still intact. Still looks okay to me. Doesn't look terrible, but I'm going to be looking for any kind of pullback share, and if we break below these lows, then I expect a deeper pullback, a break and close below here, a deeper pullback. Otherwise, this will just continue to tick up. So I'm going to leave you with that. Plenty to look at, plenty to think about. And although we do have lots of high impact news coming out this week, we don't have NFP. We're sort of now back into the middle of the month, and let's just play things as they lie. Thank you.